Is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, all respected participants and dear young budding chartered accountants. We have big number of NCS all across the region, and we all were discussing that because of this virtual platform, members from various cities have joined and they are taking benefit of this course. And a big thanks to Bimal Jain sir for accepting our invitation and guiding the youngsters, the beginners in this series. And today I'm accompanied with my elder brother, Bimal Bhai Doshi, Vice Chairman WRC, and my friend and colleague who is into GST practice, Abhishek Damne, who is also Chairman of Pune branch at present. Welcome everyone. I request Bimal Doshi, Vice Chairman WRC, to kindly address gathering. Vishal.
Yeah. Good afternoon, friends. Good afternoon, everybody. I would at the outset compliment CA Anand Jagotia for stitching together this important program. Friends, we always say that GST is important and that takes a substantial time of the overall webinar percentage if we look, but that is the necessity. But what has happened that over the last 2-3 years, ever since GST has come into force, now most of the practicing chartered accountants have elevated themselves, I would say, and they have gone into some more complex and compliance issues, and we have actually forgotten that there would always be a cycle that would be there, that there would be people who would want to begin or who would like to branch out or who would still have some questions which are of a very elementary nature. And in such a situation, I believe a refresher course, a 5-day course on GST for beginners was very, very essential and necessary. Like we always have that, income tax, accounts or any law, though it is settled, but there would always be some nuances which would take us back to the very elementary level. And I would be very honest, friends, that even I am a person of audit. Everybody knows that today also, if some question comes, I actually go to the student study material and try to look into it, that what could be the possible answer, because that is something which is very basic and elementary. So I think keeping that in mind, this course would also, you can relate to such a situation. And we have a speaker, CA Bimal Jain, and I don't think he needs any introduction whatsoever. In fact, he is amongst one of the most sought after speaker, and I have heard him on numerous occasions. And friends, let me tell you, the way in which he explains the concepts, I can tell you कि आप शायद वो language या exact terminology आपको याद नहीं रहेगी, but वो examples and situations you would always remember to relate and find out a solution to your problems. So Anand bhai, excellent. Bimal bhai, thank you. And we have Abhishek Damne, Chairman of Pune branch and a very dear friend of ours who is also over here. So Abhishek, I welcome you also on this WRC platform. Thank you for this opportunity. I know all of us are eager to listen to Bimal bhai. So thanks once again. Over to you, Anand.
Thank you, Vishal bhai. Dear participants, each month we are getting a video which is on code of ethics, and without fail on 1st of each month it is there on all social platforms. On our WRC website you can find that, and it's very useful, and all the credit, all the efforts are of our elder brother Vishal Bhai Doshi, Vice Chairman WRC. Big round of applause for Vishal Bhai for the consistent efforts and innovative things you always keep bringing, similar to my friend Abhishek. And today we are blessed with national level expert Bimal Jain, who is always call or ping away for me. I'm fortunate enough to get Bimal sir each time whenever I try to get him. Thanks Bimal sir for joining us, and I request CA Abhishek Damne to kindly introduce Bimal sir. Abhishek, over to you.
Yes, thank you Anand bhai. At the outset, let me compliment WRC for this designing this wonderful program. And Anand bhai, Vishal bhai, Lalit bhai, and Murtuja bhai all we are eagerly wait for your programs, and this is one of the wonderful program for beginners of GST. For today's session, we have CA Bimal Jain sir, phenomenal speaker in the area of indirect taxes. So it's my indeed pleasure to introduce him. Vishal Bhai just told that he actually needs no introduction, but still it's my pleasure to introduce him. CA Bimal Jain, FCA, FCS, LLB, having phenomenal experience of 21 years in indirect taxes. As well as he practices into GST, excise, customs, FTP, and DGFT matters. He is currently chairman of Indirect Tax Committee of PhD Chamber of Commerce, and he has authored a number of books on GST. He's member of Institute since 1994, as well as member of Company Secretary ICSI since 2006, along with bachelor's degree in law. He has more than 21-year experience in the field of indirect taxes. He is presently executive consultant at A to Z Tax Corp, and that is a boutique indirect tax firm. He's been a member of the ASSOCHAM FICIO as well. He is special invitee at various forums such as ICAI, ICSI. He's been eminent faculty in indirect taxes. His award to recognition is keynote. He's been keynote speaker at Guinness Book of World Record made by ICSI, the largest taxation lesson on GST attended by 4,500 participants. Then he's been Business Leader Award for Amity School, Noida. He's been speaker at NIRC as well as ICSI, ICWI. He has achieved Young Achievers Award at Ignited Minds 2015. He's been best participant in MSOP in 117th batch of ICSI. So with this, Bimal sir, we as young members, we look after you. We would like to hear from you as well that since you are in this practice since the last 21 years, so how you chose this niche area of indirect taxes 21 years ago, and how as a budding chartered accountant also, so many chartered accountants are looking at you, they follow you on the various social platforms also, and they learn a lot from you. So if you can guide them on GST as well as on this how to achieve success in indirect taxes area, so that we would be really glad. And we welcome you on behalf of WRC for this session, and we hand it over to you for further deliberations. Thank you.
At the outset, let me thank CA Bisal Dosi Bhai, Vice Chairman WIRC, my good friend CA Anand ji, Treasurer from Pune, my another friend from Pune, CA Abhishek ji, and all the professional colleagues. Ladies and gentlemen, good afternoon to all of you. I know that we are doing this GST course for the beginners, but there's a short time period for beginners for everyone. Even I'm learning today, and GST is like that. So we should not say this is a course only meant for beginners. This is a course meant for everyone who is doing GST. Because GST is giving a lot of teaching and learning day by day. And things are happening so fast. What you learn now, whatever notification has come now, no guarantee it will sustain till night. It will change, and that too through Twitter or WhatsApp. So GST, fast moving dynamic item. It's dynamic, that's the reason very interesting, and I'm liking it also. So once again, Bisal Bhai for giving this opportunity, Anandji giving this opportunity, and Abhishek for lovely introduction. I greet each one of you, all the participants for this GST beginners course. Today topic is also very interesting, supply to be made by Bimal Jain and to be received by all of you. I do not know whether you will receive it or not, because we are on a virtual platform. whether through virtual platform we can make supply or not, that is going to be important and interesting. I will try to make it more and more practical case studies so that you will get more theoretical aspect delivered in a practical way, which will help you to get clarity of the subject matter, understanding of the subject matter, and maybe at the end, 10 minutes, 15 minutes, we can do question answers also. So in case you're having any query, any doubt, you can always ask. I'm willing to give the answer of those queries, but let me start with. So topic given to me, supply, including composite supply and mixed supply. Let me start with. Now, in this topic, what is important and what we must try to understand. In this topic, you have to give a brief background where from we started. We started when GST got introduced on July 1, 2017. 17 indirect taxes merge into one basket. 23 cess merge into one basket. So the taxable event which was existing in pre-GST scenario, like manufacturing for chargeability of central excise duty, services for service tax, sale of goods, transfer of property in goods for the VAT and CST, everything got merged together. And now we are having only one taxable event, which is called supply. It can be supply of goods or supply of services. If we go to chargeable section, and chargeable section is section 9 subsection 1 of CGST Act. It says there shall be levied a tax named CGST and SGST on intrastate supplies of goods or services, except alcoholic liquor for human consumption, on a value determined under section 15 at a rate not exceeding 20% from CGST perspective, 20% from SGST perspective, and from IGST perspective 40%, and should be collected in such manner as may be prescribed from a taxable person. This is the chargeable section. In chargeable section, there's a reference that GST going to be levied only on supply and supply of goods or supply of services. Having said that, today we are going to do the number of case studies only on term supply. I'm not making PowerPoint presentation, but I'm sure you'd be putting focus on me and would be preparing certain handmade note. I would be sharing my mobile number with all of you so that you can send your handmade note to me at the end of the session. Let me see how many participants are really made good handmade note. And this handmade note, let me tell you, it is going to help you to understand the subject matter whenever you refer your own handmade note. And I'm going to explain everything one by one with a practical case study. So let me start. What is supply in GST? So supply is being defined under section 7, subsection 1. And how it is being defined? Supply includes, the term supply includes. So there are two factors which we must take a note of it. That first of all, they have not defined the term supply and started with inclusive definition. So term supply is subjective. Second, inclusive definition is too wider a meaning given to the term supply, which is going to be a taxable event in GST. I'm just recalling the term manufacture, which was defined under section 2 subsection F of Central Excise Act 1944. More than 70 years gone, still you will find number of judgment coming from Apex Court, Supreme Court. Only on the process, whether this process is manufactured or not. 70 years, more than 70 years I'm referring to. Now, what is my assumption now? The way the term supply is being defined, it is going to be 100 years of practice. You can take down my point, 100 years of practice. Take a note of it. And this term supply, which is first of all subjective, second with the inclusive definition, giving wider exposure, what is supply and what is not supply. But nevertheless, let me try to make it most of it so that you will get the all practical aspect of this term supply. Now, supply includes, without defining what is supply and inclusive definition, all forms of supply of goods or services or both. This is the way it is being defined under section 7, subsection 1, clause A. So such a wider meaning, all forms of supply of goods or services or both. And thereafter, it says such as if Bimal Jain has not understood it, such as, example, it includes sell, transfer, barter, exchange, licensing, leasing, renting, disposal. 8 exemplary terms included in inclusive parts such as, but irony is none of the term is defined in GST law. None of the term is defined in GST law. Made or agreed to be made for a consideration, and consideration can be monetary or non-monetary, by a person. So there is not to a person, by a person, in the course or furtherance of business. So business need to be there, then only we can say supply. So I'm going to do 2 important case study here so that you get better meaning of the term, and you can also analyze yourself that how the answer would be. And there are chat box. I would be requesting each one of you, those who are participating, write down your answer in chat box, that so that I can see what is your vibration on the topic. The first one, let's say I have given one opinion to you, one opinion given to you worth 50,000 rupees. Assume for example's sake, I have given opinion which is worth 50,000 rupees. You are my recipient. Now, in this case, my first question goes to all of you. If it is going free of cost, FOC, I'm not charging single penny to my recipient, to my customer. Tell me in a chat box whether GST going to be levied. Can we say there is supply met? Tell me in a chat box. I want to see your answer in a chat box. Whether supply made or not made. That is the answer I'm looking in the chat box. Can you write down in the chat box and say whether supply made or not made? I really want to see your, vibration, your connectivity with me so that I get more of clarity that you are getting the answer. So chat box, I want that everyone should start, putting your answer in a chat box. That will help me to really understand that you are getting my topic. Still, I'm not finding anything written on a chat box.
Sir, I don't think so. This is a GoToWebinar. So, if admin can confirm,
Hello, Abhishek
meeting
sir.
admin can confirm if there are...
विमल सर, हेलो विमल सर.
Yeah.
सर
Yeah,
मैं आपको सर ऑर्गेनाइजर बना दे रहा हूँ मैं आपको. क्वेश्चन सर आप देख सकते हैं सर.
आप डालिए, आप एज ऑर्गेनाइजर बना दीजिए and let me see those chat which is coming in a chat box because I want to see vibration both.
विमल सर साइड पे देखिए, आपको देखो वहाँ पे क्वेश्चन का ऑप्शन आता रहेगा. क्वेश्चन का ऑप्शन आप ओपन करेंगे ना सर, तो जितना भी क्वेश्चन आएगा सब
Okay.
आपको दिख जाएगा सर।
ठीक है, चैट बॉक्स में लोग कुछ डालेंगे तो मालूम
चैट
पड़ेगा।
बॉक्स में सर चैट
अब
में
आप,
मैं आप और आनंद सर इतने 3-4 लोग चैट कर सकते हैं। क्वेश्चन में जो आएगा सर पब्लिक का वो दिखेगा सर।
अच्छा, इसको बड़ा कैसे करने का है, नीचे लेके आए, ये
सर
छोटा
बाजू
सा
में
आ रहा है ना
छोटा सा बॉक्स का एक एरो कलर आ रहा है, उस पे आ रहा है, उस पे क्लिक करेंगे तो आ जाएगा सर।
ओके
हम्म।
ओके, ऑल राइट, ठीक है, let me okay, let me, all right participants, this was initial understanding, so you may check. I would be giving my answer to all of you and will also request you to cross check. It is no supply, for simple reason there is no consideration. So no supply made, no GST leviable. My second question to you, instead you are giving me some money consideration, monetary consideration. You gave me your watch. You said, Bimalji, I'm not having enough cash. You take this watch for the opinion given. Please tell me, GST leviable. And you can always see the answer and correct yourself. Yes, GST leviable because it is in-kind consideration. In-kind consideration. My third question goes to you, whether it is one supply or two supply. This is one supply or two supply. Supply made by Bimal Jain and supply made by you of that watch. This would be one supply. Because I am into the business of professional services. And you gave your watch to me as a consideration, non-monetary consideration. You're not into the business of watches. Hence, it is not in the course of furtherance of business. It is one supply. Had it been you are engaged, you are into the business of watches, assume hypothetically you are into the business of watches, and then you are giving watch to me in return of opinion given to you. Is it one supply or two supply? Please tell me, one supply or two supply? Then it is two supply. Yes, those who are answering two supply, they are right, because then you are into that business, watches business. It would be two supply. Rightly said. Those who are giving right answer, big appreciation. Those who are giving wrong answer, much more appreciation, because you're correcting yourself. Correct yourself. Why it is two supply? Because in first instance, watch was given as a part of consideration. But in second instance, we both are into the business. I'm into giving professional services. You are into dealing in the watches, business of watches. It's two supply. Only this transaction is called barter. Barter. So barter is again supply. For that reason, it becomes two supplies. So 8 exemplary terms playing important role. Now my second case study with all of you, and this is very interesting one, very interesting one. And this is one of the intricacies also which you love to listen. If I given the opinion to you free of cost, let's assume free of cost, you have not given me any consideration. In my hands, I have not charged GST on my outward supplies. Tell me, do I require to reverse my input tax credit? Because this outward supply, I did not charge GST. Please tell me, do I require to reverse credit ITC? Please. So you can always say yes, no, whatever. I'm seeing that you are writing in a question and answers that yes, no. Now, let me do one good analysis and then you conclude. My analysis is it exempted supply, first of all, when I'm giving free of cost? Is it exempted supply? First, we have to understand this part. And what are the exempt supplies? When we look at the provision, exempt supplies says either it is nil rate chargeable or exempted by way of exemption notification, or non-taxable supplies. Non-taxable supplies are such supplies which are not leviable to tax under CGST Act, SGST Act, IGST Act. And second, you'd be knowing one provision, section 17, subsection 5, clause H, negative list, block credit. You are not allowed to avail credit whenever any goods, I'm using the term goods, lost, stolen, destroyed, written off, or disposed of by way of gift or sample. Now for goods, if it is being alleged as given as a gift and sample, then no ITC, no input tax credit available to you. Now in my case, I'm giving services which is free of cost. Can it be alleged that this is gift on similar footing like goods given as a gift or sample? So there are difference within the GST law. If goods are given as a gift or sample, which may be alleged by the department will always say Bimal reverse ITC. But if services are being given as a gift or sample, is there any provision in GST law? This is my question. And if there is no provision in the GST law for services as a gift or sample, then I can always say no reversal of ITC required. Hope you all got my point. If you have understood my point, write in your chat box and question answer, yes, you got it. Say yes so that I will understand, yes, you got my this intricacies which I discussed with all of you. Very good, very good. Yes, I'm finding that you all are answering well, very well. And at the same time, you're making a handmade note. I want to see each one of you reverting back to me and sending me your handmade note, because this session is a live session for you. If you take down everything, you will get of your understanding clear. So I did 2 case study only on section 7, subsection 1, clause A. I discussed the meaning of barter with 1 supply and 2 supply, FOC, and discussed the meaning of goods given as a gift and sample, services given as a gift and sample. Law itself is having some ambiguity. All right, come to section 7, subsection 1, clause B. Clause B says import of services. And just pay attention, because once you understand the meaning, I'm damn sure every one of you will give the right answer. I'm damn sure. It's a virtual meeting, but I'm sure you're listening to me and we are just sitting back to back in front of each other. If you listen to my provision and then look at the case study, I'm damn sure you will reply correctly and rightly. 7.1 clause B says import of services for a consideration, whether or not in the course or furtherance of business. So whenever I import some services and pay the consideration, whether or not in the course or furtherance of business, meaning coming out, even if I'm importing services for non-business purpose, personal usage, and paying the consideration, GST leviable, and that would be reverse charge liability, RCM liability. The importer of service has to discharge the GST liability. And what is the RCM on import of services? 3 conditions. What are those 3 conditions? Provider outside India, recipient must be in India, and place of supply must be in India. So 7.1b, read with. Now you have to read one particular entry, para 4 of schedule 1, And what is that schedule 1? There are 4 specific entry. Even though without consideration, that is called deemed supply. So I said you must read 7 subsection 1 clause B read with entry 4 or para 4 of schedule 1. And what is that entry says? Import of services by a person. He may not be a taxable person, by a person. And this by a person got changed from 1st of February 2019 from his related person or any other his establishment outside India in the course or furtherance of business. So entry 4 of schedule 1 is saying, Bimal, when you import services from your related person or your any other establishment outside India, even without consideration, GST leviable, only condition it should be in the course or furtherance of business. So we have clapped 2 provision 7(1)(b) read with para 4 schedule 1. I'm creating example now and want to see the answer from all of you. Bimal Jain registered in Delhi. I'm saying registered in Delhi. This is what I said. If I import some services from my, let's say from Mr. X from USA. So Mr. X is supplying services from USA to India and I'm paying the consideration. But these import of services never meant for my business. It is for non-business purpose. Non-business purpose. Tell me GST leviable. Say yes or no. GST leviable. Yes, GST leviable. 7(1)(b). 7(1)(b) GST leviable, whether or not in the course or furtherance of business. Those who have said no, maximum are saying yes. Few of you have said no, kindly correct. Next one. I'm importing services from my own brother and we are related person. I'm changing the example now. Mr. X is my own brother. We are related person. I'm importing services from my own brother and paying the consideration. Paying the consideration. First thing, so this example, I'm paying the consideration. Reverse charge applicable, say yes or no. Yes, you should only write in a chat box yes. So yes, of course yes. It is not dependent on when you import with consideration. The RCM applicable. Third scenario, I'm not paying any consideration. I'm not giving any money to Mr. X, who is my related person. And this is for non-business purpose. Non-business purpose. Now I want to see who can give the right answer. Yes, definitely. Good. Those who are saying no, they won that. Those who are saying no, they really given the right answer. If it is without consideration, I need to read para 4 of schedule 1. And para 4 says, import of services by a person from related person in the course or furtherance of business. I said non-business, no GST. Those who have given no, they have given the right answer. If I change the example further, let's say I'm importing from Mr. X, who is my related person, and I'm not paying any consideration, but that is in the course for the business purpose. I'm saying for business purpose. Tell me RCM applicable. Yes, RCM applicable. This is what I responded. Yes, RCM applicable. Good one. Good one. Well done. So all of you has passed except few of the participants. I will request them focus what I'm saying. See, in question answers, If 95% participants are giving right answer as against 5% not giving right answer, then those who are not giving right answer, they need to focus, more focus, and check where they are wrong, why they are not correcting. All right, lot many things, lot many case study today. Don't worry, today would be the practical session and you'd be loving today. I am damn sure at the end I will take your voting and you will say yes, you loved it. That's what I'm trying my best. Coming to the section 7, subsection 1, clause C. Clause C says the specific entries which is covered in schedule 1, even without consideration, no consideration, but still that is going to be called supply, deemed supply. So schedule 1 having 4 specific entry, and these 4 specific entry even without consideration. GST leviable, entry number 1, permanent transfer or disposal of business asset on which input tax credit has been availed, ITC has been availed. So to explain this transaction, case study, I purchased the laptop, paid GST, availed ITC. After 3 years of usage, I'm donating laptop to some NGO, to some charitable institution without consideration. No consideration charge. Tell me in a chat box, GST leviable, say yes or no. Of course, yes. Yes, as per entry 1, para 1, schedule 1, permanent transfer of business asset on which ITC availed by me. Now I'm donating without consideration. It's a deemed supply. Yes, kindly correct it. If I have not availed ITC, assume I have purchased car, motor vehicle, having capacity of less than 13%, including driver's seat. I'm a director of a company. I purchased the car, paid the GST, but I have not availed the credit for region block credit. Now I am donating this car to particular NGO or charitable trust with a GST leviable. Say yes or no. Say yes or no. No, no, no GST, because there's no consideration. GST leviable only when consideration is charged. See, if it is no consideration, I have not availed ITC on this business asset. No GST. Some participant says GST leviable only when I'm charging certain consideration. So that is not the part of entry 1 of schedule 1. So that is what the difference of 2 entries. Hope I'm clear. Tell me in a chat box. I want to see in chat box. Say yes. Up till now, everything going fine and you're syncing with me. Tell me yes in a chat box. Up till now, things are going fine and you're getting everything correct. All right, all right, all right. Okay, all right. Shall I repeat again? One person wanted me to repeat. Let me tell you, just for the sake. Entry 1 says permanent transfer or disposal of business asset, where you have availed the ITC, input tax credit. So when you are permanently disposing of a particular business asset on which you have availed the ITC, input tax credit, and you're not charging any money, like I gave the example of laptop. I purchased, I paid the GST, I availed the ITC. Now after 3 years usage, I'm disposing of permanently, but not charging any money, no consideration. It is going to fall under entry 1, schedule 1, right?
even though without consideration, GST leviable. That's what the provision says. Yes, leviable. Second question was, when I purchase motor vehicle, paid GST, but I have not availed the ITC, input tax credit, because of block credit provision, 17 subsection 5. Now, if I dispose of this business asset, give it to some NGO or charitable trust without consideration, whether GST leviable? No, because I have not availed ITC. If I charge some money for this motor vehicle, then of course GST leviable. Then that is not the part of entry 1, schedule 1. This is what I said. So the guy, the participants who said repeat again, I did it. Am I clear? Tell me in a chat box, yes, you got it. Once again in a chat box, yes, so that I'm on same page with all of you. All right, all right. Very well done. Very well done. Entry 2, interesting one. What is entry 2? Supply of goods or services, or both, between related person or distinct person. Distinct person means if you take two separate registration and the same PAN number, permanent account number, you become distinct person. That is the concept. Supply of goods or services or both, between related person or distinct person, even without consideration, in the course or further in sub-business. In the course or further in sub-business. Here I'm going to do 2-3 case studies, important case studies. Let me start. Let's say Bimal Jain is having 2 plants. 1 plant in Mumbai, 1 plant in Kolkata. I'm having 2 manufacturing plants. 1 in Mumbai, 1 in Kolkata. This is the example I'm creating. So you have to really respond in a way required to be. So I'm having head office in Delhi. And okay, I'm just changing the example so that you can get the things correctly. I'm just changing the example. I'm having head office in Delhi. And I was having 2 plants. I use the word I was having 2 plants. Let's say in Maharashtra. I'm not saying Mumbai and Kolkata now. I'm saying both the plant in Maharashtra, 1 in Mumbai, 1 in Pune. In pre-GST, I need to take 2 separate central excise registration. In pre-GST, if I'm having 2 different plants, separate registration. When GST got started, I was allowed that I need not require to take 2 separate registration within same state. It can be 1 registration, 1 principal place of business, another one would be additional place of business. This provision was given with an option. If I'm having distinct business, then I could take separate registration. Different business vertical. The term used, different business vertical. I could have taken 2 separate registration, even for 2 plants in the state of Maharashtra. So first, there was no need. I could have taken just 1 registration, but I could have taken 2 separate registration within same state if having different business vertical. This different business vertical provision got changed from 1st February 2019. Now they're saying for different place of business. So in GST, within same state, if I want to take separate registration, I could have taken separate registration for 2 different plants at 2 different place of business. No need of business vertical. This is what the background coming in. Now let me ask some query to you. Having 2 plants in Maharashtra, I have taken 1 registration. Principal place of business and additional place of business. If stock transfer made from A plant to B plant under one registration, stock transfer of goods, GST leviable, tell me yes or no. Yes or no. No GST. No GST. Those who are saying yes, kindly correct themselves. Unless you take separate registration, my dear friend, those who are saying yes, kindly correct. Unless you take separate registration, you are not becoming distinct person. So no GST from A location to B location under one GST number. This is what. Had I taken two separate registration within same state, Maharashtra and Pune, and supplying goods from Maharashtra to Pune, whether GST leviable, tell me in a chat box. Yes, leviable. Leviable. This is the concept clarity. Now, next concept clarity. Had it been one plant in Mumbai and another plant in Kolkata in pre-GST, had it been one plant in Mumbai, one plant in Kolkata, then I was having two central excise registration. GST started from July 1, 2017. Tell me in a chat box, when GST got started for these two different plants in two different states, do I require, can I make one registration or two? It's compulsory. One or two. Write in a chat box. One or two. Will always be two. Will always be two. Will always be two. Yes, everyone is right. Everyone is right. And if stock transfer made by Maharashtra plant to Kolkata or vice versa, GST leviable, even though without consideration. GST leviable, tell me, yes, leviable. Yes, leviable. Well done, well done. All right, all right, all right. Very well done. My next part. Next, you're getting up till now very good. Listen. If stock transfer made from Mumbai plant to Kolkata plant, you all have said GST leviable supply of goods. Supply of goods. In pre-GST, there was no VAT chargeable, no VAT chargeable, no CST chargeable on stock transfer of goods against Form F. But in GST, this is chargeable to GST. Now, what would be the valuation? Valuation is the second point. Rule 28 of CGST rule says, Bimal, you need to follow the provision of open market value, like, kind and quality, 110% of cost of provision or manufacturing of goods or services or residue method. And there are two proviso. I will discuss those proviso as well. So my question is, let me frame my question so that we can dig out the correct answer. If stock transfer made from Mumbai plant to Kolkata plant, GST leviable, we all have concluded. Supply of goods, entry 2, schedule 1. Second question, what is the valuation? Let's say my cost of production is 70 rupees. I'm giving example to you. 70 rupees is my cost of production for Maharashtra, Mumbai plant. At what price you need to stock transfer from Mumbai to Kolkata in this given situation? Tell me in a chat box what should be the pricing. So I am looking for the answer. You write whatever coming to your mind. Whatever coming to your mind. At cost, at 10%, so 77 rupees or any amount, whatever coming to your mind. Okay, let me change little bit this example. Let's say the goods received by Kolkata plant, they can sell the product as such with no value addition as such at 100 rupees. Let's assume. So I'm going to discuss two proviso. and I'm sure you must be knowing the proviso. I'm just taking your help. The stock transfer made by Mumbai plant to Kolkata. Kolkata is having a customer selling to those unrelated customer at 100 rupees. As per the first proviso of Rule 28, what is the price can be taken up by Mumbai plant? Please tell me, what is the price as per the first proviso? So if I look at your answer sheet, I'm of the opinion that still you need to really look at the law. It is 90 rupees. 90% of sell price of recipient unit when goods are being sold as such to unrelated person. Rule 28. So you're making handmade note, right? Take down Rule 28. Sir said first proviso, 90% of sell price of Calcutta recipient unit when sold as such to unrelated person. So that would be 90 rupees. What second proviso says? Very interesting. Second proviso says, if your recipient unit is entitled to avail ITC, Calcutta plant is entitled to avail ITC, then you can take any value, even rupee 1, for stock transfer of goods from Mumbai to Kolkata, even rupee 1, when recipient unit is entitled to. Now this concept is very interesting. Listen very carefully. This concept will is a mind-boggling, will open your mind. Listen very carefully. If I take rupee 1, assume, from Mumbai to Kolkata, as per second proviso of Rule 28, possible or not possible? My answer is possible. If I say possible, I need to present before you why it is possible. If I take rupee 1 from Mumbai to Kolkata, and GST is a destination-based consumption tax. So in all probability, goods are going from Maharashtra to West Bengal. West Bengal must get GST component, right, on destination-based consumption tax. If I have taken rupee 1 from Maharashtra to Kolkata, then Maharashtra will charge GST only on rupee 1. IGST charge coming to Kolkata plant will take credit of rupee 1. Now they are selling at 100 rupees. So 99% value addition. So they will pay GST on value addition of 99% in cash, right? And ultimately GST discharge on 100 rupees. 1 rupee which was charged from Maharashtra to Kolkata, 99 rupees value addition, CGST and SGST sold within the state. Then ultimately West Bengal got SGST component on that 100 rupees. So what happened? Whether 1 rupee can be picked up. That's what the point which I was discussing as per the proviso. Now if I change the example to explain to you, if you have picked up less than 90 rupees from Mumbai to Kolkata, 90 rupees from Mumbai to Kolkata, then Mumbai will charge GST on 90 rupees, IGST, of which Calcutta will get the credit on 90 rupees, and then selling at 100 rupees by Calcutta, then they will pay GST only on 10%, if final sell price is 100 rupees. So meaning thereby, ultimately in both situation, if you charge 1 rupee, then discharging the liability on 100 rupees. If you're charging 90 rupees, discharging the liability on 10% value addition. So whether rupee 1 can be picked up as per proviso 2 of Rule 28, any amount that would be deemed open market value. And in my humble opinion, that is possible. Tell me in a chat box, you got it. You understood it, what I explained to you. Tell me in a chat box, I want to see that you got it. Please. All right, all right. That's the good part, that you all got it. And it is really, okay. There are few of the participants, they wanted me to repeat again. Let me repeat. Let me try out. Okay, I'm again repeating. Okay, I'm again repeating. Listen very carefully. And this time you must say, yes, you got it. Listen carefully. I say second proviso of Rule 28 says, Bimal ji, you pick up any value that would be deemed open market value, provided recipient unit is entitled for ITC. This is the second provision. I said if I pick up ₹1 from Maharashtra to Calcutta, then Maharashtra will charge IGST on ₹1. That is deemed open market value, because recipient unit is entitled for ITC, input tax credit. Calcutta will take credit of IGST charge on ₹1, but they're selling at 100 rupees. So on 99% value addition, they will discharge GST in cash. Second situation, if you have stock transfer at 90 rupees, IGST, Mumbai to Calcutta, Calcutta will take credit of GST charge on 90 rupees. Now they're selling at 100 rupees. They will only pay on value addition because 90% credit is available to them. So on 10% they will pay in cash. So in both the situation, ultimately GST discharge on 100 rupees on destination based consumption tax, which West Bengal has got it only for the valuation for supply of goods, stock transfer of goods. This leverage is being given, this benefit is being given. So working capital is not getting blocked in the hands of Calcutta unit with the help of Proviso 2 of Rule 28. This is what I've explained. Now tell me in a chat box, those who wanted me to repeat. First you say that for entitled for ITC. This provision is clear. Tell me in a chat box. Clear? All right. Now listen. Another case study. Interesting one. Another case study. Now we are turning to supply of services. Supply of services. Listen very carefully. Very interesting. I will do it as a interplay of your entry 2 of schedule 1, place of supply, ITC and registration. Listen very carefully, very interesting. I'm a daily registered chartered accountant. I'm daily registered. I'm being contacted by some daily registered company. They contacted me in Delhi and said, Bimal ji, we want to get stock audit done, stock audit for our 2 plants, one in Mumbai, one in Kolkata. Kindly get the stock audit done. That is what the task given to me. So we both are in Delhi. So company registered in Delhi, giving contract to chartered accountant Bimal Jain, Delhi, for stock audit to be undertaken in 2 different plants, Mumbai, Maharashtra, Kolkata, West Bengal. I taken the contract. Now I got 2 options. Bimal Jain has got 2 options to execute this contract. And I'm doing interplay, cross charge versus ISD also. Listen very carefully. Today, I'm damn sure, I'm repeating again for the sake of brevity, that you will really get clarity of all interplay, place of supply, ITC, your registration provision, your cross charge versus ISD, everything. Just listen very carefully. Bimal Jain Delhi has got option to execute this contract in a two manner. The first manner could be, I will form a team of 4 persons, deploy these 4 persons to Mumbai plant and to Kolkata plant. They will complete the audit, come back to my Delhi office, prepare the report, and then Bimal Jain Delhi has to raise invoice. My privity of contract only from Delhi company, registered office of Delhi, registered office of Delhi. Plant has not given me any contract. I have done this work at the behest of contract given by registered office in Delhi, client office. So I'm going to raise the invoice. Bimal Jain going to raise the invoice. If Bimal Jain going to raise the invoice, whether the same transaction, this transaction would be intrastate or interstate. Bimal Jain raising invoice to registered office of client registered in Delhi. Intra or inter? First tell me intra or inter. CGST and SGST. All right. No, it would be intrastate. It would be intrastate. I'm not raising invoice to Mumbai and Kolkata. I'm not supposed to. There's no privity of contract. I am going to raise the invoice only to my client from home. I got the contract and they are registered in Delhi, intrastate. Now, second question. Company registered in Delhi. I raise CGST and SGST. Can they take credit? Whether client can take credit, say yes or no. Tell me whether client can take credit. Yes, provided ISD registered, input service distributor registered, ISD registered. Because this registered office is procuring input services, which is used by Mumbai and Kolkata plant. So this registered office in Delhi can avail credit provided they are ISD registered, input service distributor registered. Hope I'm clear. And then they will distribute this credit to Mumbai plant and to Kolkata plant as per their utilization or turnover ratio. This is the one concept. Second concept, option number 2. See, one thing which I will request participants, if you get me to repeat, then what happened? I got many things to deliver. You have to listen very carefully. ISD means input service distributor, means Delhi client office has given this contract to Bimal Jain in Delhi. Bimal Jain has charged CGST and SGST because location of supplier Bimal Jain Delhi, place of supply, location of recipient, which is again client location Delhi, CGST, SGST. I posted a query whether Delhi client can take credit. I posted this query. Delhi can't take credit because they are not engaged in supply of goods or services. But they have taken this input services for their Mumbai plant and Kolkata plant. So there's a concept in GST which says Delhi can take ISD registration, input service distributor registration. And the manner of distribution is being prescribed under section 20, read with rule 54 of CGST rule. Rule 54 of CGST rule. So what this Delhi will do? This CGST, SGST charged by Bimal Jain, they will distribute this credit to their Mumbai plant and Kolkata plant, either on utilization, the percentage of usage, or the turnover ratio. This is what I explained. To that extent, those who wanted me to repeat, can you say once again in a question answer? Yes, clear, you got it. This concept is clear. Shall I move now? All right. I'm moving now. Listen now. Second option is Bimal Jain now not sending the team from Delhi. Said, no, I will not send the team from Delhi. Now I'm requesting my Delhi, my Mumbai branch and Kolkata branch. I got my own branches in Mumbai and Kolkata, and telling them, boss, you go to Mumbai plant and you go to Calcutta plant, undertake this stock audit and submit the report to me. So instead, I'm sending 4-person team from Delhi. I'm asking my Mumbai branch and Kolkata branch, Bimal Jain, to undertake this work in Mumbai plant location and Kolkata plant location. After doing this stock audit, my Mumbai branch and Kolkata branch sending the report. I'm compiling the report. Now I'm raising the invoice to my client registered in Delhi, continue to be CGST and SGST, and client need to be ISD registration, ISD registered for distribution of credit. Only one change which you need to highlight here. Here I have not sent my team from Delhi. Rather, I asked my Mumbai branch and Kolkata branch to undertake services on my behalf, Delhi behalf. With the Mumbai branch going to raise the invoice, supply of service. With the Kolkata branch is going to raise the invoice from Kolkata to Delhi as a supply of service in terms of entry 2, schedule 1. Tell me, without consideration, in the course of furtherance of business, applicable or not, whether this Mumbai branch and Kolkata branch will raise the invoice to Bimal Jain, HO in Delhi. Yes, yes, that's what I'm saying. Yes, applicable, GST, leviate, and that is called cross-charge. That is called cross-charge. Cross-charge for chargeability of GST, for the chargeability of GST. And the valuation, you can follow that second proviso of Rule 28. Second proviso of Rule 28. So in chat box, I want to see that to that extent, whatever I discussed, you got it. You say yes, you got it. Say yes, you have understood it. Only yes in a chat box. So maybe, all right, all right. So did you understand one difference of cross-charge versus ISD? Cross-charge versus ISD? Mumbai branch and Kolkata branch raising invoice to Bimal Jain Delhi is a cross-charge. It is not ISD. Why it is cross-charge? For simple reason, there is a supply of service by Mumbai and Kolkata branch to Delhi. And what was the case for ISD? That registered office of client is not undertaking any service. Hence, they can at most ISD registered. Difference between cross-charge and ISD is there is element of service when you look at cross-charge. And there's no element of service when you look at ISD, input service distributor. Now, how this transaction can further be redesigned? Instead, Delhi client, Delhi registered office giving me a contract, it can be separately given by Mumbai plant and Kolkata plant also. It can also be executed separately by my Mumbai branch and Kolkata branch also. So different way of business modeling can be done for this transaction. My objective was just to explain entry 2, schedule 1. Tell me in a chat box once again. Hope you got everything, the all aspect which I wanted to cover, you got it. Say yes, this is what I wanted. So maximum are saying yes, very good, very good, very good. Okay, come to the last component of this entry 2. There is a recent advance ruling coming from Maharashtra. Region point is saying no, I do not know. Region, what is your point? I have tried myself best, whatever best possible from my side. Everyone is saying yes. Region point, there's someone saying no. Can you tell me what is the point you wanted me to draw? I have given my all explanation. What is no you're referring, I could not understand. I'm trying my best, but I do not know unless you write back. Nevertheless, listen now for all the participants. Last component, there's one judgment from Appellate Advanced Ruling Authority, Columbia Asia Hospital. And somebody asked me in a chat box also, sir, what happens if recipient unit is not entitled for the ITC? So what is this Columbia Asia Hospital? To discuss the cross charge of services. If I'm having a head office in Bangalore and having 2 branches in Mumbai and Kolkata, assume, and my CEO, CFO, common HR team, IT teams, accounts teams sitting in Delhi office, whether Delhi office is really providing services to Mumbai branch and Kolkata branch? Is there any cross charge? Tell me in a chat box. Is there any cross charge? Yes, cross charge is available. Cross charge exists. That is what the Columbia Asia Hospital. That is being upheld by appellate authority also. Next question comes, if it is cross charge in terms of entry 2 schedule 1, what would be the valuation? Valuation would be same. Second proviso says any value would be deemed open market value provided recipient unit is entitled for ITC. But this Columbia Asia Hospital advanced ruling was when they were engaged in healthcare services. Their outward is exempted. Outward is exempted. So if outward is exempted, can I use the second proviso of Rule 28? Can I use second proviso of Rule 28? Possible? No. No way possible. No way possible. Then I need to determine my why reserve for simple reason. That answer is given in proviso 2. Open market value, whatever value you want to take up, that is available only when recipient unit is entitled for ITC. But in healthcare services, your outward is exempted, reserve. Then credit is not available. So recipient is not entitled for credit. Hence, this second proviso of Rule 28 not going to be applicable. Reserve. You said why, I explained to you. That's the reason it is not applicable. So you all got it. So if I'm not entitled for ITC, recipient unit is not entitled, then you can't pick up any value as a deemed open market value. Then what to be done? Then you have to really look at your total cost. And in total cost, the debate which is going on pan-India, do we require to include salary cost of CEO, CFO, common HR and IT teams and accounts team? Do we require to include salary cost in total cost? There are 2 schools. One school saying we need to include the salary cost in the total cost apart from all other overhead costs from Delhi to rate cross-charge invoice to Mumbai and Kolkata. Another school saying why salary costs need to be included, and I'm of the view, in my humble opinion, we all are looking for the answer. Salary per se is out of GST, entry 1, schedule 3, out of GST. If I include salary cost in my total cost, Delhi, for raising invoice to Mumbai and Kolkata, am I not taxing something which is otherwise not taxable? First point. Am I not taxing something which is otherwise not taxable? First thing. Second thing, if I include salary, then I'm just adding more cascading, First, salary was not taxable. And second, if I'm including salary in my total cost while raising invoice of cross charge from Delhi to Mumbai, then Mumbai and Kolkata will not get any credit because my outward is exempted. So cascading further goes down, further enlarged. So to my humble opinion, what clarity we are looking from the government of India. They have not clarified as yet. For recipient, they are not entitled for ITC. At least salary cost must be excluded while calculating total cost. Otherwise, we are taxing something which is otherwise not taxable because of Schedule 3 transaction. This is my explanation. Please tell me, am I clear to all? Tell me in a chat box, am I clear? Okay. Let me do once repeat. Someone wanted some. Jayati was there. She said, please repeat. Jayati, I said, if recipient unit is not entitled for ITC, then you cannot pick second proviso of Rule 28. Then picking up any value as a deemed open market value, not possible. In such cases, you have to really look at the costing of Delhi, total cost of Delhi for raising cross-charge invoice to Mumbai branch and Kolkata branch. So for total cost, my next question was, do I require to include salary cost? That is the point I raised, salary cost of CEO, CFO, common HR, IT and accounts team. This is the point I raised. If I include salary cost, charge GST, then my recipient will not get credit. It is enlarging, cascading going down, enlarging further. I'm only saying salary which is out of GST because of entry 1 schedule 3. Why should I include in my total cost? On the pretext, salary which is not taxable. If I include, it is not taxing something which is directly not taxable. This is the point I made. And to my mind, salary per se not taxable. And salary cannot be considered as a daily employee. It is employee for all. Even for Mumbai and for Kolkata, as a company, he is employee. So to my mind, salary cost should not be included in total cost. And it is really giving some relief those who are engaged in exempted sector like healthcare, education, where you cannot pick up second proviso of Rule 28. This is what I said. Please tell me now it is clear. Shall I move further? Please tell me in a chat box. I need really yes from all of you. The last case study of this entry 2. Employee giving services to the employer in the course or furtherance of employment, employee to the employer. Neither a supply of goods nor supply of services. Entry 1, schedule 3. Now the problem comes when employer is giving services to the employee. Whether GST leviable, this is the question. I'm picking up recent advanced ruling coming from Tata Motors Limited in Maharashtra. An issue was Tata Motors Limited has engaged a contract carriage bus, non-air conditioned bus for transportation of its employees to and fro from residence. Now this contractor who was providing services was charging GST to Tata Motors Limited. There were two important questions before Advanced Ruling Authority. The first question was, and this question was framed because Tata Motors was charging a nominal amount from employee concerned for availing the services of transportation. And this nominal amount is being charged just to control and check proper authorization of usage of transportation facilities by employee concerned. Nominal amount. So as against, let's say, 100 rupees cost coming into Tata Motors, they may be charging 5 rupees from the employee concerned. This was the issue. So the first question before Tata Motors Limited Advanced Ruling Authority was, whether GST leviable on this 5 rupees. This was the first question. And second question, whether Tata Motors can avail credit of GST paid to the service provider of that non-air conditioned contract carriage buses. These two questions was posted to Tata Motors Limited in that particular advanced ruling. What advanced ruling authority has said, advanced ruling authority has said that 5 rupees which was collected by Tata Motors Limited, it is nothing but in lieu of employment. In lieu of employment, hence no GST leviable. This is the advanced ruling which is there. What is my view? I will give it to you. You just listen what Tata Motors Limited said. No GST leviable in lieu of employment, entry 1, schedule 3. This is the advanced ruling. And second, credit available only to the extent of cost borne by Tata Motors, which is 95 rupees. This is the advanced ruling of Tata Motors. To my mind, it is not as per the law provision. Not as per the law provision. If I look at the 5 rupees which is charged by employer, Tata Motors Limited from employee concern, that is always supply, and that is not in lieu of employment. 5 rupees recovered by employer from employee concern. There's one advanced ruling, Caltech Polymers from Kerala, advanced ruling and upheld by appellate authority also. And there was the issue of outdoor catering. So what was that outdoor catering? Let me tell you so that you get more clarity on this subject matter. I'm a company. Let's say I've engaged one outdoor caterer for preparation of food, 100 rupees per thali. He charging GST at the rate of 5% on 100 rupees thali. I'm then charging 10 rupees, assume, to my employee concern at subsidized rate, So this 10 rupees which I'm charging to my employee concern, whether GST leviable, Caltech Polymers appellate authority said yes, supply of service. And what would be the valuation? 10 rupees? No. Valuation will be in Rule 28. Open market value, like, kind and quality, 110% of cost of provision or the schedule method. So your recipient employee is not entitled for ITC. Then minimum 100 rupees need to be considered from valuation perspective. This is what the point coming out. Second point pertaining to ITC, input tax credit. So if employer charging 10 rupees for that outdoor catering, what rate I'm going to charge as a company, 5% or 18%? The rate prescribed 5%. And when I am charging 5%, no ITC in terms of rate notification, no ITC, no input tax credit. If I pick up 5% GST rate. Now what is the answer coming out? But there's one change in ITC provision, input tax credit provision. And that input tax credit provision says, if it is obligated on employer to provide to the employee concerned, obligated, statutory obligation, then credit is available to the employer. Now, my conclusion is that, which I'm sharing with all of you, in my humble opinion, Tata Motors Limited, that advanced ruling is not going on right perspective. Whatever nominal amount charged by employer from employee concern is a supply of service, GST leviable. Second, credit is available. Yes, credit is available post facto 1st February 2019. If it is statutory obligated on employer to provide to the employee concern. Third, how you can change the transaction, business modeling, how you can change the transaction. And this is very interesting. Had it been given free of cost to employee and no nominal money is being charged, then on outward, no GST leviable. Then it can be said it is in lieu of employment contract. And then the press release issued on 10 July 2017, clearly saying any FOC supplies by employer to the employee In lieu of employment contract, no GST leviable. Credit available. Outdoor caterer charging GST. Your bus transporter charging GST. Credit available. Yes, available. If it is statutory obligated on employer to provide to the employee concerned. Factories Act, compulsory fooding arrangement to be made. And if it is statutory obligated, then credit is available in the hands of employer. This is what the crux coming out. Sometimes we debate notice pay, right? Notice pay in lieu of salary in lieu of notice pay. Employee giving to the employer, it is in lieu of employment contract. Sometimes employer is giving to the employee. I always say it is in lieu of employment contract. Then no GST. And there is one Madras High Court judgment in T&D Electrical. In the another judgment which I'm sharing with you, allow me that judgment. It's T&D India Limited. T&D India Limited. Service tax regime. Notice pay salary. No service tax leviable. Similar provision for GST. Similar provision for GST. So having said all this thing, employer to the employee, no exemption. Can't be considered in lieu of employment contract. GST leviable. Base modus operandi would be nothing to be charged, free of cost. Hence part of employment contract. Part of employment contract. And then credit available if it is statutory obligated in the hands of employer company. So this is the summarization. Please tell me in chat box, yes, you got this employer-employee clarity. Employer-employee clarity. Okay. Chat box. Okay. All right. All right. All right. All right. I've seen your chat box, which you're responding also. I've seen that one. Okay. Okay. Now coming to entry 3 of schedule 1. Supply of goods between principal and agent or vice versa. Even without consideration, GST leviable deemed supply. Now, I'm going to section 7, subsection 1A. So section 7, subsection 1A, B, C, all three clauses are closed. Section 7, subsection 1A says, if some activity which is coming in schedule 2, that schedule 2 only going to determine the classification either as a supply of goods or supply of services. But that is supply only when it is covered within the four corners of section 7, subsection 1, clause A, clause B, clause C. Clarity is, henceforth, schedule 2 is going to be used only for determining classification. That's all. Either it is supply of goods or supply of services. But that is not chargeable to GST unless it is coming within the four corners of section 7, subsection 1, clause A, clause B, and clause C. So for you, that you can always make a note of it, that section 7, subsection 1A, which is referring to schedule 2, and schedule 2, which is only for the classification, it is going to be supply only when it is covered under section 7, subsection 1, A, B, C. Otherwise, no GST leviable. So schedule 2 has got 7 broad entries, and there are 18 specific entries, out of which 5 are supply of goods and 13 are supply of services. So schedule 2 henceforth to be read with retrospective date 1st July 2017 only for the classification purpose. So you can have clarity that schedule 2 has got no other relevance except to determine classification. Coming to section 7, subsection 2, saying that notwithstanding anything contained under section 7 subsection 1 or 1a, schedule 3 transaction are neither a supply of goods nor supply of services. Schedule 3, and there are 8 specific entries. One entry we have done, employee giving services to the employer. Now let me do the next case study, which is para 7, para 8. Entry 7, entry 8 of schedule 3. And listen very carefully. There's one advanced ruling coming from Gujarat Advanced Ruling Authority. And contract is, listen very carefully. I'm registered in Maharashtra. I got some customer in US. And US customer wanted me to supply goods. And for that, I got some vendor in Korea. So my Korea vendor is directly shipping the goods to my US customer, Korea to US. And this question was before Advanced Ruling Authority. 2 questions was there before Advanced Ruling Authority. For me, I got the contract from US client. I'm registered in Mumbai, Maharashtra, Indian registered. I got customer in US. I have made arrangement, supplied goods from my supplier in Korea directly to US. Tell me, import duty on import of goods, leviable, say yes or no. Tell me yes or no. Not leviable. No, it is, first of all, import duty not leviable for simple reason. For simple reason, there is no import of goods in custom frontier of India. No import duty leviable. No import duty. Now, when you are making revenue, so purchase was from Korea. Now you're selling to US customer, you're raising invoice, sell invoice, revenue coming, credit side of PL account. GST leviable, tell me, GST leviable. GST leviable, till para 7 and para 8 of schedule 3. Let me have clarity. Let me, I could see their mixed response coming in a chat box. Listen carefully. No GST leviable. It is called merchant trading in third country. No GST. And it is not export. Please don't say somebody has said export. Export means when you're taking out goods from India to a place outside India. So this is not the case. You're not taking out goods from India to a place outside India. It is not export, but it is merchant trading, third country trading from Korea to US, not coming in India. No import duty and no GST because of para 7 of schedule 3. So on the sell transaction, no GST. Let me take another example. I'm importing goods, let's say at $100 from Korea. While my goods on high seas, I sold the goods to someone. I'm registered in Mumbai. I sold to some Calcutta party at $120. When my goods is on high seas. So for me, my purchase cost was $100. My sell is $120. So this sell of $120 in Mumbai registered person, GST leviable, tell me. GST leviable, no GST, no GST. Oh, in Mumbai registered person, no GST. Only the Calcutta registered person who will file bill of entry for home consumption, Calcutta fellow, who bought the goods on high seas at $120, he is going to file bill of entry. And he needs to discharge all custom duty, including IGST. At what value? At what value? $100 or $120? $100 or $120? $120. In the hands of buyer who is filing bill of entry, $120. So in the hands of Bimal Jain, Maharashtra registered, no GST leviable, no GST leviable. All right. Third transaction. I imported the goods. After importing, I have not cleared the goods. I put it in a custom bonded warehouse. In bond, bill of entry was filed. Custom bonded warehouse. When my goods warehoused in custom bonded warehouse, I sold the goods to Calcutta party. So I'm registered in Maharashtra. I imported the goods. I filed in bond bill of entry. I have not filed bill of entry for home consumption. I only stored the goods in custom bonded warehouse. Now I got the customer in Calcutta, sold the goods when my goods were stored in custom bonded warehouse at $120. So I would be having sales revenue. Mumbai fellow would be having sales revenue of $120. With a GST leviable in the hands of Mumbai fellow. Please tell me, GST leviable? No. No. GST not leviable. It is called in-bond sell. It is called in-bond sell. And here, the Calcutta fellow going to file ex-bond bill of entry for home consumption. The Calcutta buyer will file ex-bond bill of entry, ex-bond bill of entry for home consumption, and then he will pay custom duty including IGST. Then he will pay custom duty including IGST $100 or $120 because he purchased at $120. Please tell me $100 or $120. Please tell me $120. Yes. All right. All right. Very good. Very good. So I say 3 in 3. Merchant trading in third country sell, high C sell, and in-bond sell not chargeable to GST, neither a supply of goods nor supply of services because falling in para 7 and para 8, entry 7 and entry 8 of schedule 3. That's the reason no GST leviable. So Mumbai fellow, I sold. I was having sales revenue. No GST charge. No GST charge. Do I require to reverse ITC, input tax credit, common ITC? I was a Mumbai registered person. I did merchant trading. I did high C sale. I did in-bond sell. My sales revenue on which no GST charge as per the example we have done. Do I require to reverse ITC, input tax credit, common ITC pertaining to this sales revenue which was not chargeable to GST? Tell me yes or no. Whether reversal would be required. Reversal would be required. Reversal would be required. Okay. All right. No reversal would be required. Nothing. No reversal. As per section 17, subsection 3, explanation clearly says for reversal of common ITC being exempted supply, not applicable for schedule 3 transaction except sale of land and building. Except sale of land and building. So all 3 transactions, no GST, but no ITC reversal required because of 17 subsection 3 explanation. Hope I'm being able to explain. I've given the explanation in a way you have digested. Tell me in a chat box now, yes sir, all 3 transactions got registered to our mind. Say in a chat box, yes. Say yes so that I feel yes, you all are getting my maximum. Okay, there's once again one guy saying, please repeat again. Okay. All right. For the benefit of that particular, please explain briefly second transaction, Sri Nivasan. Second transaction, let me tell you. There are 3 transactions. Korea to US, first transaction. Second is the high C sell. High C sell means I imported the goods at $100, but when my goods was on high siege, I sold the goods to some customer in Calcutta. It has not entered custom frontier of India. So when my goods was on high siege, I sold the goods to customer in Calcutta at $120. I said whether it is going to be taxable in the hands of Mumbai fellow who is initially imported. No. It is going to be taxable in the hands of Calcutta customer. He will file bill of entry for home consumption. Third, I said in bond sell. I imported, stored in custom bonded warehouse, sold to my customer in Calcutta, and this Calcutta fellow going to file ex-bond bill of entry for home consumption. He will pay custom duty, including IGST. No GST in the hands of Mumbai registered person. Free transaction. No GST levied on free transaction with a common ITC reversal required. I said no, because of explanation under section 17 subsection 3 of CGST Act. No reversal of ITC, even though no GST charge on outward, because of the provision, except sale of land and building. This is what I have explained and now narrated in a brief. So the person who wanted me to repeat, I explained it. Tell me in a chat box, yes, you got it. In a chat box, the guy, Srinivasan. Okay. Now, so I did section 7 subsection 1, section 7 subsection 1A, section 7 subsection 2. Now coming to the composite supply and mixed supply. Composite supply and mixed supply. Very interesting. I will do 2 case studies. It will be clear to all of you. Composite supply means when 2 or more taxable supplies naturally bundle. Please listen carefully. Very interesting. 2 or more taxable supplies naturally bundle in conjunction with each other, then that is going to be taxable on the basis of principal supply. And what is mixed supply? 2 or more supplies. Here, taxable word is not there. 2 or more supplies under single price, not naturally bundled, then that is going to be taxable on the basis of highest rate of that particular combo. To explain both the things, let's take an example so that you can understand. Let's say you got car and your car got damaged. Your car got damaged. You have come for repairing of car to my service center. While repairing of your car, I'm using the auto components which is chargeable at 28% GST, worth 8,000 rupees. And I'm also charging 2,000 rupees as my labor charge. And labor charge GST rate is 18%. So there are 2 taxable supplies naturally bundled. Auto component used for repairing of car and my labor charges. So it becomes supply naturally bundled. My simple question to all of you, is it composite supply or mixed supply? Please tell me in a chat box, composite or mixed? Tell me in a chat box, composite or mixed? Composite. It's a composite. It can't be mixed because this auto component, your intention was not to buy auto component. These auto components are being used for the provision of services. You came to my service center to get your car repaired. It's a composite supply. Supply of goods or supply of services. Total 10,000 rupees, which includes 8,000 rupees for auto components, 28% GST rate, 2,000 labor components, 18% GST rate. Tell me, what is the principal supply? Supply of goods or supply of services? Tell me, service or goods? This is the only service or goods. It's a service. You came for repairing of car. You never intended. You never wanted to purchase auto component. You never wanted. You only wanted to have supply of service, And what is the rate applicable? 28 or 18 on 10,000. What is the rate applicable? 18% applicable. 18% applicable. This is what my answer. 18% applicable. All right. This is called composite supply. And what could be mixed supply? Mixed supply would be, and that's example. Let's say you get some gift hamper prepared, and gift hamper containing different item of different rate applicable, and you're charging under single price. So you got one gift hamper prepared for Diwali or Navaratras is coming in, and that 10,000 rupees gift hamper consists of different item which is otherwise can be sold individually. So you got certain alcoholic beverages, you got some non-alcoholic beverages, some chocolates, some mixed fruits, everything you got inside, and 10,000 rupees a single price is charged. That is called mixed supply, because that is not naturally bundled. It can be sold otherwise. Then that combo would be taxable on the basis of, tell me, that combo would be taxable on the basis of, please tell me, that combo going to be the highest rate. Yes, Chirag, highest rate applicable. Well done. Now coming to two components, so that we are through with the composite and mixed supply. My second argument. You go to a hospital, we go to a hospital, let's say, and while going to a hospital is providing healthcare services. So for inpatient, those who get admitted in a hospital, they are giving medicine also, and they are giving certain services also. Services of what? Operation, looking after certain services of, doctors are visiting in, giving services. So different medicines are being also provided and services are also provided, but both are joining together and given as a healthcare service, and healthcare is exempted. So medicine which is otherwise sold, separately sold, GST leviable. But when medicine are being given, which is naturally bundled for the provision of services, healthcare services, then nothing going to be charged, no GST leviable. Now, in this case, what I wanted to pass on to you, what message I'm giving it to you. I said composite supply means two or more taxable supplies. Now, healthcare is exempted. Now, in this given situation, the question may come that medicine was taxable, but the services are exempted. We are making a combo of taxable and exempted. Will it be composite supply? Will whole combo be exempted? My answer is yes. For the simple reason, healthcare services exempted, but it was taxable at first go. At first instant, it was taxable. Thereafter, it got exempted. So taxable, both medicine and healthcare, naturally bundled in conjunction with each other. Principal supply would be healthcare, because patient has not gone to purchase the medicine. Patient has gone to get healthcare services. Hence, composite supply. Whole combo would be exempted. Hope you got it. Tell me in the chat box you got it. Say yes. A simple yes will help me to go further. Yes. All right. Come to the third component. Pick up that repairing of car example. I was knowing that there are 8,000 rupees auto component, 28% GST, 2,000 rupees labor charges, 18% GST. Can I bifurcate my invoice? Supplier can bifurcate invoice. Auto component 8,000 separately 28%, 2,000 labor charges separately 18%. Can I do that? Possible. Can I do that? Say yes and no. Can I do that? Possible. So I'm getting mixed answer. There's one circular. There's one circular number 347. Circular number 47, dated 8th June 2018. It has said same example for repairing of car, and they have said yes, it is possible, it can be bifurcated. 8,000 can be separately charged at 28%. Labor can be charged at 18%, and quite obvious that you will not be looking for accumulation of credit on auto component. So you may be interested to bifurcate. But my only humble point and my legal submission would be, if it is allowed to be bifurcated, then the concept of composite will go away. If it is allowed to be bifurcated, then there is nothing left out. Then what is the intention of composite supply under Section 8? So otherwise, as per circular, it can be bifurcated. Coming to the last component, and which is would be summarization. If I'm selling one shirt at 5,000 rupees, and with one shirt I'm giving another shirt free, one shirt, another shirt free, so both shirts are going at 5,000 rupees. Otherwise, individually pricing 5,000 rupees. One shirt plus one, 5,000 rupees. The other shirt which was given free, first of all, you have to tell me, is a composite supply or mixed supply? Tell me fast, quick, composite or mixed? Now here you can do composite and mix, will not make any difference, because ultimately you are going to apply GST rate of shirt. Ultimately you are going to apply GST rate of shirt. So it is not making anything different. Next question, which is very important, the other shirt which was given free of cost, the other shirt which was given free of cost, with the ITC available, input tax credit available, ITC, tell me, is it not a free gift or sample with the ITC available? ITC available, nothing given free. No, it was combo of 1 plus 1. I'm not giving anything free of cost. It's a transaction value of two shirts with one combo price. Nothing is being given free, hence credit is available, ITC is available. To my mind, credit is available. Now let me do summarization part, and then we will take closure of today's session. The topic which was given to me, supply. I just request my participants to just stay with me. I have got two questions to ask to all of you. Two questions. See, I have tried my best to explain the concept of supply today. I said what is supply, and I discussed at length with practical case study of Section 7, subsection 1, Clause A, Clause B, Clause C, read with Section 7, subsection 1A, when Schedule 2 only for the classification, subsection 2 of Section 7, Schedule 3, neither a supply of goods nor supply of services. And at last, I discussed composite and mixed supply. First, I want to see from your side. See, I've been told that whole India is attending this program. Please tell me in a chat box, you liked it. That's what I really want. Did you like it? Did you find really this session has made change in the understanding, your thought process, which you believe that yes, it has gone well? Okay, thank you very much. Next question to all of you. All right, next point. If at all you want to get something, because I always believe I'm trying my best pan-India. I'm trying in pan-India to give GST in a good and simple language. You can always join Bimal Jain, either on Facebook, Twitter, LinkedIn, YouTube, to get all update on GST. Have you made handmade note? My second question. How many of you had made handmade note? I'm giving my mobile number to all of you. Send your handmade note. Let me see that who is the one who has done really good work. He has really captured everything, whatever I've said to you. Take down my mobile number, 98 106 04 563. I'm repeating, 98 106 04 563. Send your handmade note, whatever you have made, whatever rough you have made. I just want to see your efforts, genuine efforts, your intelligent efforts. This handmade note going to help you for your understanding of GST. My third question and last question. My third question and last question. Repeating once again, 98 106 04 563. I've given my number once again. Now, last and humble point. I have tried my best to explain the term supply, and I've taken many practical examples. What I'm looking from you, I'm just trying to get. Sometimes we make PowerPoint presentations, sometimes we go extempo. I have given extempo today. No PPT was prepared, but provision is there with you. You can always check section 7, subsection 1, subsection 1A, subsection 2, schedule 1, schedule 2, schedule 3, composite supply under section 2, subsection 30, rate bit section 8. You can see mixed supply under section 2, subsection 74, rate bit section 8. Provisions are there. Tell me which is of your liking. I have tried my best to get you all connected with me like a classroom study, not giving one-sided. I have in my 2 hours deliberation, I have made sure that you are interacting, participating, giving your answer, whether right or wrong. Which is correct, PPT way or the extempo way which you liked it? Because I'm taking your input for further building up. Okay, whatever might be. See, it is always your choice. I'm not saying that it should be my choice. It is always your choice. All right. So somebody saying extempo, PPT saying somebody saying PPT. All right, it's a both way. Those now my okay, not an issue. My only last humble point, if it is not PPT, but you have attended today without PPT, did you felt like you missed something? My last question, if you think PPT, but without PPT, did you felt anything you could not get it? Then it makes yes. If not, then all right, all right. All right. My last humble point. Please do join my Facebook, Twitter, LinkedIn, YouTube, wherever you like, for getting regular update on GST. So with this, allow me to say thanks to, first of all, WIRC, Anand Bhai, my vice chairman today, and my another friend from Pune who introduced me today. I'm thanking each one of you for such a patient listening. The way you have listened to me today, the way you responded, yes and no from your side, that was mind-boggling. I never thought of that much of positive response, that much of automative response from your side. You gave your answer, whatever was coming to your mind, without any hesitation. That makes my program a success one. Anand Bhai, are you there? Now we can have conclusion part. Anandji, are you there? Let me check whether Anand is there or not. Yes, he has come. Yeah. Yes, please, Vikasji. Yeah, please. Your voice is not coming, Vikasji. Your voice is not audible.
Now it is coming, sir.
Yeah, now it's coming. Yes, please. Handing over to you.
Thank you, sir. Thanks a lot. And sir, it's always a great pleasure, great delight, I would say, to listen to you on the topic of GST. And I have quite a few times we had a pleasure to have you in Ahmedabad as well. I'm a regional council member from WRC, but from Ahmedabad. So
my pleasure. My pleasure.
And the way you explained the things, it was in such a lucid way, I would say. A person like me who never deals in
विकास सर,
is still I want to
विकास
understand.
कैमरा नीचे करेंगे, आपका कैमरा थोड़ा नीचे करेंगे. हाँ सर.
Fine now?
Okay sir, thank you.
So for a guy like me who never does anything in GST, still I was able to understand the concept of the composite supply or the combo or the mixed supply and all these things. So when we have the speakers like you, then yes, undoubtedly the profession of our chartered accountants, so far as the GST is concerned, is in safe hands, I would say. And great to have you, sir. On behalf of WRC and all the participants today, I would extend a heartfelt thanks to you and would love to see you again and again for deliberating and for sharing your knowledge with our members. Thanks a lot, sir. Thank you very much.
My pleasure. Thank you very much. Thanks to each one of you. Thank you very much.
Thank you, sir.